Welcome to Markets Now. I'm Michelle Rook along with Dwayne Bussey with Bolt Marketing. And we ended with a sharply lower day in the livestock futures. Grains ended mixed with the feed grains lower, soybeans to the plus side. And let's talk about soybeans first. Dwayne, soybean meal scoring new contract highs, and talk about how that pulled soybeans along and kind of what actually precipitated that.
Yeah, it probably started last week when soybean oil crashed lower. There was a lot of oil meal spreads where people were buying oil and selling meal all the way back to last year, building those positions again and again. So it probably started with short covering there. So they're selling the oil and buying the meal. It started there a little bit. But, soybean meal is going to rally if Argentina is in a drought. And to me, they are in a drought. Argentina actually accounts for about 40% of the global soybean meal trade. So if they're having production problems there, the meal is going to rally. And I think that's what we saw this morning. That coupled with some nice USDA export sales flashes, and soybean market had a very good day today.
Yeah, except soybeans ended off of their high. Did we run up into a little chart resistance?
Yeah, we did right away in the morning. I was really hoping we could poke through that resistance and keep going on this Argentina drought, but some of the other outside markets, and I'm looking right at the wheat and corn market that couldn't follow the rally, kind of helped pull the soybeans off, and gave the traders the position to sell at that resistance level and pulled back. So yeah, a little disappointing technical trade today.
Right. So corn, like you said, did try to follow soybeans, but the biggest problem corn has had has been this lower wheat market. Where do you think we're going to eventually find support, or what's it going to take here for us to find some buying interest?
On the corn market, I think we're very close. In fact, I kind of like the way the market tried to come back into the close today just a little bit. I wouldn't doubt if right at the 635 area, we start to make a U-shaped bottom in March corn. I don't know if we've got the bullish news stories to go screaming higher unless Argentina's drought continues and maybe that pushes into Brazil, then all of our markets will go higher. But so we probably don't have a real bullish story right here in December, but I don't think we have to go much lower here in the corn market either, Michelle.
So you think we're at an area, though, where the market is fully factored in some of the poor demand, because that seems to be another factor that has been waning on this market?
It sure has. And we got a USDA report later this week coming out on Friday, and the average trade estimates are for ending stocks to go up just a little bit due to less export demand. I don't know if USDA will do that this go around. They like to usually just punt during the December report and wait till January. But the trade is right to say that export demand has been bearish. So to answer your question, have we factored all that in? Maybe not 100%, but it's so early in the marketing year, and we like to ship and sell corn later in the marketing year. I don't think we have to get too alarmed or too worried. Remember, we don't have a lot of supplies to work with in the corn market anyway. So if we have a little bit less export demand in corn later on in the market year, that's just fine.
And funds have been selling in the corn, but they have also been selling aggressively in the wheat market. What is it going to take here to bottom that wheat market? And where do you think we find support finally here, Dwayne?
And sadly, we've busted a lot of the support I was looking at, Michelle, and I don't see much of an area for bottom here. The only thing I do see is a market in wheat that's very oversold. So technically, we could just bounce 30 cents on correcting the oversold condition. But as far as bullish news, I don't really have anything for you. And I don't think I will until about next spring, when our winter wheat crop that's went into dormancy in very poor condition, if that comes out in poor condition, and obviously the lower wheat prices isn't going to buy more spring wheat acres, and we're still at a 50-year low for our wheat supplies. So, I think there's a bullish story eventually in wheat. The problem is it just isn't here right now. So it's really hard for me to say that we're near a bottom or going to form a bottom and rally. Oversold is the most bullish thing I can say about wheat. That's not really very good, is it?
And even at these lower prices, we are not stimulating the kind of demand we need to turn things around either.
No, we might be getting close, though. I think you do some of the math behind it. I think we're a little bit lower than French wheat now, which is saying something. But will people actually step up and buy wheat from us? That's we'll see. U.S. dollar needs to keep trending lower too. That would help the wheat market maybe form a bottom. But yeah, let's go down and find some export demand. That's not the worst case in the world.
Yeah. Plus, record crops in Russia and Australia certainly not helping either. No. What about this cattle market? Some big losses here today. How much of that was tied to concerns here about this big drop that we've had in the cutout values?
I think nearly all of it is tied to that box beef market down sharply last couple of days, and down about another dollar at midday today. Not good. And we'll see that sometimes after Thanksgiving. A little bit poor demand. What we need to see is later in the week. Does that lower box beef market, does that contribute to lower cash market or not? I would say steady money would be a big victory this week. Packers in years past always are pretty good about forcing cutouts down or forcing the futures market down a little bit and getting lower cash. But this is a different time. We all know the inventory is getting tighter and feedlots are current. So I'm going to watch the cash market closely to see if they can form maybe just stay steady. I'd call it a victory. But once this box beef forms a bottom here, I'll be bullish this cattle market again. I think we're still going to trend higher.
Yeah, and technically we haven't really done any damage or anything.
No, absolutely not. In fact, the feeder cattle market maybe got a little bit too far ahead of itself and needed to pull back here a little bit, back to the 180 mark, something like that. That's about where the index is. It seems like the national index struggles to get above 180, but boy, you get up in my area, Northeast South Dakota, these cash feeder market is just white hot and just on fire, and looks like it's going to just get higher and higher as we go along.
You mentioned the soft product values impacting the beef sector, but it's also been a problem here for the hog sector. Cash trade has not really found a bottom yet either, has it?
No, I don't think so. And I think that's got to trend lower. The hog market opened last week sharply lower. And I thought, there you go. That market's done now and going to trend lower. Then we had this big rally all the way back up just to beat up little guys like me. And now this market seems to be headed back lower again. Yeah, pork cutouts lower, cash lower, kind of a seasonal tendency there too. I think this will continue on here. China's on again, off again as far as buying our pork. Last week, they were a nice buyer in our export market, but just not enough to make a difference. I'm afraid this futures market is ahead of itself and needs to go lower in the future.
Well, the back months, we talk about it being lower today, but the back months yesterday, some of those scored new contract highs. So was this maybe a little profit taking or hedge pressure too, or not?
I think both. I like the idea of some hedge pressure out there. Obviously, if I'm talking bearish the hog market, I like my producers to be looking at hedges out there. Those summer contracts are at really lofty levels. Hey, I don't know what the next year holds as far as the recession and inflation, but 105 is just a nice place to start for some summer contracts.
Yeah, definitely a two-tiered market though. And that might continue for a little while here. All right. Thanks so much for joining us. Dwayne Bussey with Bolt Marketing, and that's Markets Now. Okay, we'll do the next one. 3, 2, and 1. Tuesday's market closes were mixed in the grains. Joining us with analysis is Dwayne Bussey with Bolt Marketing. And let's talk about the soybean market. Wow, we rallied strong on the heels of new contract highs in soybean meal. And let's talk about what's pushing that meal market right now, Dwayne.
Yeah, I think when it comes to the meal market, I think it's the drought in Argentina. Argentina produces or exports they control about 40% of the global exports in the soybean meal market. So that's a big percentage. So if they have a drought and they have production problems there, the soybean meal market's going to rally here. And you compound that with yesterday, we also had some export sales flashes from soybeans to China, one to China, one to unknown. We're probably going to assume that's China as well. So kind of looks like China stepped in and bought the dip.
Right. And then we've continued to see meal strong because of these meal oil spreads that have been unwound. And that's been really happening ever since the RFS disappointment here last week, wasn't it?
Right. Kind of a really reverse in that trade. Last year, people started buying the oil, selling the meal, loving that spread because of the long-term bullishness we had to biodiesel, right? And with EPA's mandates last week or their recommended mandates, people are unwinding those spreads. Funds were record long soybean oil. So not surprising that they're getting out of those longs, but I don't know. Longer term, I still really like the biodiesel industry and soybean oil as well.
Despite that, we could not get a higher close in either corn or wheat. And we've had a lot of fun and technical selling pressure in both corn and wheat. What's it going to take to finally maybe put a short-term bottom in those markets, Dwayne?
Corn market could find a bottom first. I mean, I understand our export demand hasn't been stellar. But that being said, we don't have a huge supply either. So I look for March corn to probably start to shape a U-shaped bottom here, right around that 635 area where we closed yesterday. And I don't know if I've got the news to tell you, Michelle, that it's going to go flying higher, but I think we can at least form a bottom here. But on the wheat side of things, man, I just don't have much for bullish news to tell you that wheat market has to go higher, but it's grossly oversold. So you could have a technical bounce at any point in time, but I don't look for a bullish story until next spring in the wheat complex.
Yeah, and demand has not picked up enough in either corn or wheat to help out here, in addition to the technical selling that we've seen.
That's exactly right. We kind of ended the supply demand side of the year, as we kind of learned what production we have here in the U.S. Now we're in the demand phase, and demand isn't stellar for either one of those two crops. So it's hard to get that bullish story, like I mentioned. But supplies are very low for both those crops, and
Yeah.
you get to next spring, we have to plant more acres, and we got to get the crop planted and grow a crop. So I look for us to have another rally next spring.
Well, let's hope for better days ahead. Thanks so much for joining us, Dwayne Bussey with Bolt Marketing. We'll have more Ag Day coming up.